For today's business, and I'm joined once again by Jameel Ahmad, Chief Analyst at GTC Group. Good morning, Jameel. How are global markets faring this morning?
Thank you, Oliver. So this time yesterday, we saw a little bit of profit taking and a negative session taking place in Asia. And in fact, 24 hours later, we saw the same trends take place in Europe, the United States yesterday. And in fact, we're also seeing a lower Asian session today. Most likely, it's profit taken towards the end of the month, where traders are known to prefer to close some positions. But we also need to take into account in the larger picture that we had a number of different milestone highs and record-breaking all-time highs throughout different global assets. So this is likely encouraged some profit taking as well. Having said that, there's some really key economic data coming out from a number of different economies across different regions over the next 24 hours, including the European Union, the United States, but also the likes of Japan, South Korea, and China. And digesting that data, because we always say the devil's in the detail, it's likely to lead the charge for how global markets conclude this month, and also how we open trading for June 2024 heading into next week.
And there's an OPEC meeting coming up this week. What do you think would be most interesting in that particular meeting?
Yes, we shouldn't forget OPEC and OPEC Plus are set to meet this weekend, which is likely to lead to some volatility in the oil assets as we open trading for Monday. Now, we do know that OPEC have a incentive to keep oil prices elevated. By elevated, I mean supported over the longer term. Having said that, we're also seeing some of the data, and again, we say the devil's always in the detail, that oil inventories, and by that I mean stockpiles of oil, are climbing. So we need to see some more demand from oil, which we are starting to get because economies are picking up steam, the likes of India, China having a very successful 2024 so far. At the same point, we're also seeing the likes of the United Kingdom are improving economic sentiment. We do have a more improved sentiment in the European Union. That would be helped by lower central bank policy. So I do expect that OPEC Plus will be incentivized to keep oil prices supported. And by that, they are likely to continue supply cuts. By supply cuts, I mean they're going to be producing and exporting less of the commodity. But we do need to see some signals from wider economies of improved demand, which would help lower this supply and demand dynamics that in fact have kept oil prices pressured and lower over a historical term if we look over what's happened over the past couple of years.
And we're also expected to have some key economic data released this week. What can we expect to learn from that?
Yes, so starting with the European Union, we have the European Commission set to release its business sentiment and consumer sentiment reports. That's important heading into the European Central Bank decision next month. But in fact, all eyes are going to be in the United States because we have US GDP data for Q1 set for later today. So far, the preliminary figures have suggested that the US economy only expanded at annualized approximately 1.5% over the first quarter, where it's expected to grow somewhere around the 2.5% region. So the data shows that if we compare the fourth quarter of last year to the first quarter of this year on an annualized basis, in fact, economic growth has been pretty much half. And we also have some very key inflation metrics that we've been speaking about this week from the preferred gauge of indicator of the US Central Bank. And of course, the biggest elephant in the room right now is that uncertainty over whether and when the Federal Reserve, the US Central Bank, are going to begin to cut US interest rates, which is really going to be important for global assets as we head into the second half of 2024.
Thank you very much for that, Jameel Ahmad, Chief Analyst at GTC Group. It's time now.